So that's kind of the three different channels of loans, a little bit about how lenders make their money. I'm just trying to pull the curtain back just a little bit. If you have any questions, you call me. My number is 512-789-6967, and I can be reached again by email at mark@markhairston.com. It's Hairston. And then I also want to give you some 5 tips on how to shop for a mortgage. I again recommend you talk to your bank or credit union, talk to a mortgage company, get a referral from your realtor or friends, and then get 3 different options. And I would do that ahead of time. Don't wait till you're under contract to buy a home. It's kind of too late. There's too much else going on. So I would start that process early. And so the number one thing I would do is find an experienced loan officer. I've got 37 years experience. We've done thousands of mortgage loans in town. There's not a type of loan I probably haven't done. Get reviews, go online, get Google reviews, get reviews from who your referral source is, maybe talk to some of their other clients who used them. And also look up to the state, the Texas State Savings and Mortgage Department to see if there's any complaints against them. That would be public knowledge. So you may want to research the client under their NMLS number. There's a certain license number they have to give you, the LO, I should say, and you can do some research on that. Number 2 is same day. So when you're shopping around, mortgage rates are a commodity. They change all the time. Make sure that you're looking at apples and apples. I had a client send me a loan estimate by a lender the other day, and it was dated June the 5th. Well, 2-3 weeks ago, rates were different. So I said, hey, Kurt, go out to the same guy and get a new estimate in writing, and then we'll take a look at it. We'll see if I can beat it. So the same day is really, really important. Number 3 is really be careful of rate aggregators. A rate aggregator is somebody online like a Lending Tree or a Bankrate or NerdWallet. You go online and you put in mortgage rates, and you'll see these rate aggregators show up. What they're doing is they're selling their service to lots of lenders. So if you put your name and number in there and email, you're going to get bombarded by lots of people trying to get your business from around the country. It's not a good way of doing business, in my opinion. Okay. Same thing with Rocket Mortgage as an example. I'm not bashing Rocket Mortgage. They're just one of them, but they have 2 channels. They have a consumer direct channel and they have a wholesale channel. So I can send a loan to a client to Rocket Mortgage at a cheaper rate than they will give you if you use them online. That's just an example of rate aggregators. Number 4, I should say, is your lock period. The longer the lock, the higher the rate. So I can go anywhere from 15 days on a short close up to 6 months. The further I lock your loan out, the higher your interest rate is going to be, because there's risk to the lender. So they want sort of have an insurance policy that if you're closing in 45 days or 60 days, a lot of things can change in 45 or 60 days. So they're going to charge you a little premium for lock period. So make sure you're comparing 30-day locks versus 30-day locks, not 15-day locks versus 45. The 5th thing is, again, compare rates and fees. And the key to this conversation right here, this point, is what they call the APR. The APR stands for the annual percentage rate. The annual percentage rate is a calculation based on an interest rate plus cost. So in other words, if there weren't any closing costs, if there weren't any discount points or origination fees, then the APR and the note rate would be the same thing. Let's say 6.5. Now, let's say your note rate is 6.5 with me, but there's closing costs of, let's say, $4,000. Your APR is going to be 6.6 something or 6.7, because it calculates the cost of the loan, including the fees. So the higher the fees, the higher the APR. The APR is really the best way to compare mortgage loans, and you should be able to. Every lender should be able to tell you the APR when they disclose to you. Matter of fact, by law, they have to disclose to you what the APR is. So that's another thing to consider. Most people don't think about that. But I had a client call me yesterday, and he was talking to a large online lender who was offering an unbelievably low rate. And I said, Victor, I can't really compete with that. Did they put this in writing to you? He says, well, no, they just said it over the phone. I said, well, I would get that in writing, because if that's their deal, I would take it. So he did. Well, when he found out what the deal was, it wasn't a good deal. It was 3 discount points on that rate. So if you're talking to me over the phone, I don't have to tell you that. But when you want it in writing, I have to tell you how much it's going to cost as far as the APR. So never take a quote over the phone and think it's going to be legit. And then finally, I want to talk a little bit about do's and don'ts. There's 3 things that you want to do prior to thinking about. Most people think about buying a home way in advance. They don't just wake up one day and say, I'm going to go buy a house. So you're thinking about buying a house this year, sometime in the spring or the fall next year. 3 things I'd like you to do. Number 1, get your credit checked. And you can go online to annualcreditreport.com and get a free credit report. It's doesn't cost you anything. It does not give you your FICO scores, which is really important, but it will at least give you a snapshot of what your credit looks like. And if there's any problems, we can talk about how to fix those problems up front. Don't wait till the end. Number 2 is when you go online to some of these companies like Credit Karma, as an example, and you pay $10 for your credit score, maybe it's free. I don't know. They're going to sell you or give you what they call a Vantage score, which is not the same as a FICO score. A FICO score is what they call a Fair Isaac credit score. And that's what all mortgage lenders use is FICO, not Vantage. Vantage has a place in the market, but not if you're going to get a home loan. So make sure that you don't go to your lender and say, hey, my credit score is 780 when it's really 700, because we will do the research on that pretty quick. Be careful about that. If you come to me, I can do what they call a soft pull. A lot of my clients say, hey, I don't want my credit pulled because it'll give me a ding on my credit report, which is true. So what I can do is I can do a soft pull, which means that I can I can analyze your credit and score without it digging on your credit report. I can't close a loan with that, but I can at least get you pre-qualified with it. So keep that in mind. The second thing, again, is get pre-approved. Make sure you get all your ducks in a row. I had a client call me last week. He went under contract, and the realtor, who was a pretty good agent, I was a little surprised. He referred him to me, but he hadn't been pre-approved with me or anybody else, and I couldn't help him. He was brand new on he had limited down payment, and he had just started a business. Well, I can't do a loan unless you have some experience in that business, and nobody else could either. So make sure that you understand exactly what it's going to take to get your paperwork in order and to make sure that you meet all the lender requirements up front. That's really, really important. And number 3, I think around that is know your budget. A lot of my clients want to buy a $600,000 house, but can only afford a $400,000 house, or vice versa. Sometimes they want a $400,000 loan versus $600,000, and they can afford the other. But know your budget intimately. Do your homework around what it is exactly that you can afford. Is it $2,500 a month, or is it $5,500 a month inside your own budget? And then we can work backwards into qualifying you for the loan that's going to work best for you and your family. And a couple of don'ts in the process. Number 1, don't change jobs in the loan process. Keep your job until closing. Don't make any major purchases. Don't go out and buy a new car or any big appliances, because a lender will check your credit at the very end of the transaction and make sure that you haven't taken on any more debt. And finally, don't have any amnesia. I say that jokingly but don't remember, we're going to do a lot of research on you. So up front, be very forthright about what you tell the loan officer in conversation about any other debt you may have, or child support, or any other real estate you may own. Put everything on the table so we can make sure that we get you that loan approved quickly and get you in that property quickly. So again, my time is up this morning, but I want to put it out there again. The Truth in Lending is my free report. If you have any questions, you can reach me at 512-789-6967. I'd be happy to talk about this conversation or send you this, and we can see if we can help you. Have a great day.